Amazon juggernaut, navigating the next decade of growth. Introduction: the evolution of an everything company. From its humble beginnings as an online bookseller in 1994, Amazon has metastasized into a global titan, a true everything company, whose tendrils reach into e-commerce, cloud computing, digital advertising, logistics, entertainment, and artificial intelligence. As of late 2024, with a market capitalization hovering around $2 trillion, the question for investors isn't whether Amazon is a dominant force, it's whether this behemoth can continue its staggering growth trajectory. The future prospect of Amazon stock AMZN hinges on its ability to leverage its three core pillars: Amazon Web Services (AWS), its North America and international retail segments, and its high-margin advertising business, while successfully navigating regulatory headwinds, intense competition, and the relentless demands of capital expenditure. The triple-engine growth model: AWS, advertising, and retail efficiency. The bull case for Amazon is built on the synergistic power of its three primary profit centers. 1. Oz, the profit powerhouse re-accelerating. After a period of optimization and slowed growth post-pandemic, AWS is showing signs of re-acceleration, fueled by the generative AI revolution. Amazon is not merely playing catch-up, it is leveraging its foundational strengths. With proprietary AI chips Trainium and Inferentia, a fully managed service in Bedrock, and strategic investments in AI startups like Anthropic, Amazon is positioning Oz as the most practical, secure, and enterprise-ready platform for deploying AI at scale. The cloud market is expected to grow exponentially, and AI could add hundreds of billions to its total addressable market. AWS's margins, typically above 30%, will be the primary driver of Amazon's overall profitability for the foreseeable future. 2. Advertising, the silent cash machine. Often overshadowed by Oz, Amazon's advertising business has exploded into a $50+ billion annual revenue stream. Its advantage is unmatched intent data. People come to Amazon ready to buy. This makes its ads incredibly effective for conversion. With the introduction of sponsored ads on Prime Video and the growth of its demand-side platform, Amazon is poised to take significant share from the digital advertising duopoly of Google and Meta. This segment boasts margins even higher than Oz, making it a critical contributor to bottom-line expansion. 3. Retail, the flywheel optimized. The core retail business is no longer a low-margin afterthought. Under CEO Andy Jassy, Amazon has ruthlessly optimized its fulfillment network, regionalizing delivery to cut costs and speed. The integration of one-day and same-day delivery as a standard for Prime members has increased purchase frequency and loyalty. Furthermore, the third-party marketplace, which now accounts for over 60% of units sold, is a high-margin commission business that turns Amazon into a landlord of the digital mall. International retail, long a loss leader, is also moving steadily toward profitability. Catalysts for future growth: generative AI integration. Beyond AWS, Amazon is embedding AI across its operations, from Alexa's next-generation evolution and AI-powered shopping assistants to robotics in warehouses and demand forecasting. This has the potential to revolutionize customer experience and operational efficiency. Healthcare and grocery breakthroughs. Ventures like Amazon Pharmacy and One Medical Primary Care represent massive, untapped markets. Success here could unlock another trillion-dollar opportunity. Similarly, cracking the code on mass grocery adoption through Amazon Fresh and Whole Foods remains a key long-term goal. Logistics as a service. Amazon's vast fulfillment and transportation network could eventually be offered as a third-party service, directly challenging UPS and FedEx and creating a new revenue vertical. Significant risks and headwinds. The path forward is not without obstacles. Regulatory scrutiny. Amazon is in the crosshairs of regulators globally: the FTC in the US, the DMA in Europe, concerned about antitrust practices, data usage, and its dual role as a marketplace operator and competitor. Major lawsuits or forced structural changes could impair its business model. Intense competition. Every core segment faces fierce rivals: Microsoft Azure and Google Cloud in AI, Cloud, Shopify, Temu, and Shine in e-commerce, Google and Meta in advertising. Margin compression in retail and cloud is a constant threat. Capital intensity and macro sensitivity. Amazon's ambitions require immense continued investment in data centers, fulfillment infrastructure, and technology. A macroeconomic downturn could simultaneously slow retail spending, enterprise cloud migration, and ad budgets, hitting all three engines at once. Execution risk in new ventures. Amazon's history is littered with both spectacular successes, Oz, and notable failures, Fire Phone. High-stakes bets in areas like healthcare and entertainment with massive Prime Video content spends may not yield adequate returns. Valuation and investment outlook. Amazon stock is rarely cheap on traditional metrics, as the market prices in future growth. Its price-to-earnings (PE) ratio often appears high but is more meaningful when viewed through the lens of its sum-of-the-parts potential. Analysts focus on free cash flow generation and operating margin expansion as key metrics. Over the next 3 to 5 years, the likely scenario is one of steady, disciplined growth. The era of growth at all costs has been replaced by a focus on profitability and return on investment. Investors should expect AWS growth to stabilize in the mid-teens to low 20% range, with AI services becoming a larger mix. Advertising to remain a high-growth, high-margin segment, potentially surpassing AWS in profitability. North American retail to deliver consistent, moderate revenue growth with expanding margins due to optimization. Conclusion: a cautious buy for the long-term horizon. The future prospect of Amazon stock remains compelling, but it is a story of evolution, not revolution. The company is transitioning from a hyper-growth disruptor to a mature, cash-generating operator with several powerful engines still in their mid-growth phase. For long-term investors with a horizon of 5+ years, Amazon represents a foundational holding. Its competitive moats, network effects, unparalleled infrastructure, and unmatched data are wider than ever. The generative AI wave represents not a threat, but the next major adoption cycle for its most profitable unit, Oz. However, volatility is inevitable. Regulatory news, quarterly fluctuations in cloud spending, and macroeconomic shocks will cause significant price swings. The investment thesis relies on faith in management's ability to execute complex, capital-intensive bets across multiple frontiers. In summary, Amazon is not a stock for the faint of heart or the short-term trader. It is a bet on the continued digitization of the global economy, the enterprise shift to the cloud and AI, and the enduring power of a consumer-centric flywheel. While the days of 30%+ annual stock gains may be behind it, Amazon is well positioned to deliver solid, market-beating returns as it monetizes its immense scale and innovation pipeline. The everything company, if it navigates the challenges ahead wisely, still has room to grow into its ever-expanding ambition.